Welcome to Markets Now. I'm your star work with Scott Varilek with Kooima Kooima Varilek. Well, a lower day in everything on Thursday except for the cattle market. Scott, let's talk about cattle. We started off lower with lower box beef values, powered back into the close, but pushed by some higher cash, right?
Yes, thanks for having me. And except the cattle, all down except the cattle. I can handle that. So, no, it feels good. We've been down a long road and significant break here at the end of summer, and it's just starting to have that really good feel to it again. We've had a nice steady uptrend here, and this morning out of the chute, we traded lower box beef. That was the initial trade. It's quite a bit weaker. We're below 300 on the choice, and we traded that for about 35 minutes, and then we were back to, okay, what's this cash doing? And it's proving to be the leader again. Southern bid started at 184, then 185, and did hear of a 185.50 as well, trading down there. So higher down there. The North going to try to get 2 to 3 higher than that. They should, with higher quality cattle and current, I'll say, in the North. That's how the yards really feel. So asking higher prices. There's been some 186 that's been passed, so yet to develop any major northern trade, but at least we've got a couple different packers out there looking and hearing that there's a few short bought, and that's kind of been the case the last couple of weeks. Packer participation has been great, able to kind of pick where you're going with them. So liking what I hear there, and it just feels really good that, hey, we've got this leverage and we're really getting these prices to move a little bit again.
No doubt. All right, it's Thursday. We also get the actual slaughter data, the weights out. And again, we continue to struggle with heavier weights, mostly, as you said, that's down in the South, right? In those areas where they have formula cattle.
Yeah, the weights, we've had more of a problem down in the South. I mean, that's where the Packers got the leverage, and they're able to put more days on them. And I think these are just Band-Aids. And in the background, I did just hear 187 has traded in Nebraska. So there, where the passing the 186 helped there as well. So, but in the North, everybody's feeling pretty current, saying, hey, our carcass weights here where we negotiate cattle. We're trying to actively move them. And even with good weather, we've got good weather and cheap feed, we're still trying to get them sold. So those are also factors for the extra weight. But it just feels like this is still just tight supply hanging on. And that's just a Band-Aid to try to get more production, trying to squeeze, put more weight into the market. I don't think the Packer would be cutting kills. I think that's more because of we're seeing, hey, the numbers aren't there. They don't have enough to keep going. And that's why our imports are big. Just a lot of those different, just kind of patches that they're trying to put on the holes. Cause I think we're still tight supply, year over year, again, so this is the part of the cattle cycle, and it's just starting to kick in yet again.
I want to reiterate, because you mentioned the Packer kill cuts. Really, it looks like a week where we could be around or under 700,000 for the weekly kill. A lot has been made about that, but again, you're emphasizing the cattle just aren't there, right?
Oh, that's what I think. And that's why we have all of these packers bidding. And I mean, there's some packers that are bidding that you don't normally sell cattle to. And I think that's just a great feeling. Us negotiators are not used to that we have options. And so that's a really good feeling. And we only have that if we have some kind of leverage over the market and the numbers aren't there. So they're driving around looking at inventory, and that all feels really good.
Right. As you said, we love cash-led rallies, but technically, let's talk about, we've gotten through some major resistance areas. Here are several layers of resistance on especially the December live cattle. Where do we project to now?
We've made it through a lot of, retracements and moving averages and different spots on charts. We had our 3 legs lower, so it's kind of on this correction, and everybody's looking for a number. And now we're kind of looking at July highs at 189.50 to 190. So that's all possible now. So we're October kind of leading the charge here today, closing the gap. I mean, it's been a little bit of a bull spread led market here. So we've got the open interest popping. So, and that's in that December contract. So funds are jumping in, and it's trading a lot more normal. I guess is when you have that open interest number that's that big, it kind of erases some of the erratic swings and has a little bit more volume there. So the backing feels great. Looks like there's room for another $5 technically that could be put on this market. We've been overbought for some time, and you get a little correction and wonder, okay, this might be the couple dollar correction, and been able to fight it off every day. Just crawling back. Those opening lowers have turned into higher closes. So this has got a great feel to it. So there's your number 189.50 that we're looking at for possible the next December resistance spot.
And rally in the stock market continues to help out too, doesn't it?
Yeah, that doesn't hurt at all. I love it when we don't have to worry about it. The outside influence has two sides to it, and it's been quite head scratching because you're hearing about manufacturing issues, and you're hearing about different companies that are not making it, and economy struggles. But then you have a Dow Jones and S&P that are charging new highs. So I guess that kind of erases some of that noise that you're hearing, but that's not going to hurt us at all. And I think our charts usually can overlap, not always, but there's times when they really can. And when we were down this morning, stock market up a couple hundred, feels good that we were able to kind of meet them and join them on the higher side.
You bet. Hog market, of course, it's a lower day today. Did we run up into chart resistance? Is this profit taking into the quarter, or what do you think? Or maybe positioning ahead of the hogs and pigs report, which will come out after you and I talk here.
Yeah, I think the hogs has been it's been grinding higher, and I feel like fundamentally we're all ready for it to break. December futures just felt like they had climbed too high with coming into seasonal supply and some decreased capacity. So I think we were kind of holding that, wondering why it's rallying so hard. What am I missing? Is there all this export news coming, or what is happening? And that's not showing up either. So I think they just kind of finally found their spot, their time to correct. And technically we can kind of, get below this little mini uptrend line that we're on. So I'm still standing my ground that they're due for a correction, and that we can make that happen here soon. And they came $1 off the lows today. That's already kind of confusing again, but that was at one point I thought they were really going to kick the bucket, but kind of on that stairs up, elevator down kind of mentality. But they fought their ways back to a less of a down day, but still leaning negative there.
Yeah, and exports weren't too bad again this morning. So like you said, a little head scratcher there. Okay, grains all in negative territory as we closed out the day here today. We've had a nice run up. How much of the pullback is just farmers selling?
I definitely think that's part of it. Part of this rally that we've had, that the 30 cents off the lows and corn, and 60 on the beans to 90. And I feel like we know we've got this big crop coming in. We're diving into it across the corn belt. And it was just a matter of time before we did run into some of that selling. And you can see the basis slip just a little bit here. That's going to happen seasonally as some of those extra bushels are going to be sold. We've got some $10 cash beans being dangled, and hey, not saying we shouldn't be taking some of that, because it's something we haven't seen in a while. So I think that's what's probably pulling it down. A lot of the rally was just funds getting out of shorts. That
Right.
seems to be the most simple part of it. One of the biggest reasons that I think we put this much on. We do have a weaker dollar and some demand picking up. So those have both been on the side of this rally. But we knew that just the sheer size of this crop. Yes, there's variance in yields, but ultimately very good yields and quite a few bushels coming in. It just felt like a matter of time before we get a minor correction here as some of that selling just starts to happen. So, and I'm saying, yes, I can definitely let some of those bushels go, and there's other things I can do, taking the cash now on this rally. And I think that's where farmers are looking for sure.
And the bullish fundamentals that we may have been trading, including Brazil's drought, including China and their economic stimulus, all this talk about extra demand and cargoes of soybeans that maybe they've purchased. A lot of that's baked in, isn't it?
Yeah, I think it certainly is. And I think the demand story is what we need to keep hearing, because I think that's, we have to have it. We have to have that good demand to really pop it up. The South America, too early to tell. It really is. I feel like that's been a story lately, that we have a big up in the market. And then you'll read something about South America or an issue somewhere. And I think this is kind of coming in after the fact. There's not a real major story for me to stand up and say, okay, weather problem or it's all fixed, either or. I don't think it's leaning real hard either way for me. So a lot to happen there yet. And we know that they've got more acres and they've got more crops. So what I'm challenging guys to do is look at the next year's crop. If you're happy with selling these $10 beans right now, using some of the accumulator type of strategies, your elevators have them, your brokers have them. You can look at some $11 cash beans for next year already. So maybe a guy has to kind of thinking that way a little bit about it.
Okay, good stuff. Thanks for joining us. Scott Varilek with Kooima Kooima Varilek. That is Markets Now.